Welcome back to the deep dive. Today, look, we're stepping away from just tracking crypto prices or, the usual hype cycles. We are digging into something genuinely huge, something that's fundamentally reshaping global asset markets as we speak.
Huge is definitely the word. If you're still thinking Web3 is mostly about, say, digital art or niche finance apps, you are missing the main event. We're talking about the tokenization of real-world assets, RWAs, as the industry calls them, the projections. They're staggering. Up to $30 trillion by 2034.
30 trillion.
Yeah, and that number, it isn't just big, it's actually more than the GDP of several major economies combined. It really could be the biggest wealth transfer opportunity we see this decade.
Okay, that's the massive picture. So our mission today is to cut through all that noise. We want to show you exactly how blockchain tech is moving beyond those early niche uses into real, tangible business utility. You're going to leave this deep dive really understanding the four pillars driving this enormous multi-trillion-dollar shift. You'll have knowledge that, frankly, 99% of casual observers don't even realize they need yet.
Exactly. We've looked at sources detailing how everything's converging, decentralized finance, real NFT utility, making different blockchains talk to each other, and of course this RWA tokenization wave. So we're unpacking these four areas. We want to highlight the kind of entrepreneurial opportunities opening up right now. It's pretty unprecedented.
All right, let's break it down, make it relatable, because $30 trillion, it's just an abstract number, isn't it? How does RWA tokenization actually affect, say, someone listening right now who's looking for new opportunities?
Well, it fundamentally changes who can build wealth. Think about investing in something like commercial property.
Right. Usually needs huge capital up front.
Exactly. Hundreds of thousands, maybe millions, just to get in the door.
Yeah.
Tokenization flips that script entirely. So instead of needing, let's say, $1 million for a stake in some high-value building, tokenization can divide that ownership into maybe 1,000 digital tokens, verifiable tokens, worth $1,000 each.
Ah, okay, so it breaks it down.
It breaks it down.
Yeah.
Dramatically lowers the barrier to entry. Suddenly, these high-value investments that were totally inaccessible, they're potentially open to smaller investors anywhere in the world.
That solves the access problem right there. And I guess the efficiency boost is the other side of it, cutting out legacy costs, those horrible delays you get in traditional finance.
Precisely.
It sounds like this new system offers, continuous trading, like 24/7, ignoring time zones or bank holidays, sort of like bypassing the worst traffic, maybe LA or Mumbai traffic, straight to the financial district, but open all the time.
That's a good analogy. Efficiency and liquidity, those are the twin engines driving this whole shift.
Okay. Which brings us neatly to Insight 1, DeFi 2.0, and the institutional bridge. We kind of survived the DeFi Wild West, didn't we? So what does this 2.0 maturity actually look like, and what finally got the big banks interested?
Yeah, DeFi is definitely growing up, stabilizing. This new generation of protocols, they're focusing much more on sustainability, moving away from those super short-term, high-yield incentive games. We're seeing smart ideas like protocol-owned liquidity, dynamic interest rates that adjust to market conditions, building real resilience. And the scale is already huge.
How huge?
To take Lido Finance, for instance. They manage over $12 billion in total value lock, that's TVL, the assets held in their system just from liquid staking. This isn't some tiny experiment anymore. It's a serious financial ecosystem.
And the institutional interest, that seems tied directly to RWAs actually coming onto the chain, right?
Yeah.
We're talking about, a $13.5 billion RWA market already back in December 2024? That's over 60% growth pretty quickly. That's real proof.
It is. You've got platforms like Ondo Finance, Maple Finance. They're pioneers here. They're integrating traditional assets like actual U.S. treasuries or real estate debt directly into DeFi. And you see major analysts jumping in. McKinsey, for example, they're projecting the total tokenized asset market could hit $2 trillion by 2030. $2 trillion. When firms like McKinsey put those kinds of numbers out, a fundamental shift is underway.
But hang on, the big barrier's always been risk, right? Especially for institutions. A smart contract bug wiping out funds, that's a complete non-starter for them. You mentioned AI and insurance solutions are emerging, but I have to ask, are these insurance options truly scalable enough yet? Can they really cover a potential $2 trillion market, or is it still very much early days, highly experimental?
That's absolutely the crucial question. Because that insurance layer, that safety net, it's non-negotiable for serious institutional money. And look, while it's still relatively early, the pace of innovation here is rapid. AI integration is already helping better automated trading, much more sophisticated risk modeling. That helps lower the chances of things going badly wrong. And crucially, the insurance products themselves are getting smarter, specifically designed to cover smart contract risks. The market knows it has to scale these insurance solutions to unlock that $2 trillion potential. So yeah, significant capital is flowing into building out those safeguards right now.
Okay, that covers the financial engine room. Let's shift to Insight 2, NFTs beyond the JPEG. Because when we talk $30 trillion, we're obviously not just talking about cartoon avatars anymore. This utility shift seems fundamental for proving ownership.
Oh, absolutely. Forget just art and collectibles. NFTs are becoming basic business tools. Think of them as immutable digital containers holding verifiable ownership, maybe identity credentials, or critical tracking data for physical goods.
Okay, give us a concrete enterprise example. Bring that down to earth.
Sure. Think about supply chain management.
Hmm.
Take a program like Amazon's Track and Trace. They're using NFTs essentially as a digital twin for products.
A digital twin?
Yeah. So from the factory, through shipping, right to the customer's door, that product's journey is logged immutably on the blockchain via its NFT. It breaks down information silos, gives you instant tamper-proof transparency. Traditional systems just can't compete with that.
That single source of truth idea. Yeah, that's powerful. We see it in luxury goods too, right? Using NFTs as proof of origin to fight counterfeiting, instant authentication.
Exactly. And the utility creates totally new revenue streams. Look at music. Artists like Kings of Leon or Grimes, they pioneered releasing music via NFTs. The smart contracts built into those NFTs, they automatically distribute royalties to the artists, the collaborators, instantly globally. It cuts out layers of intermediaries and delays that have always plagued the music business. It's a potential game changer for artists.
And loyalty programs are getting in on it too, like Starbucks Odyssey. They're using NFTs to make loyalty more engaging, like a game with real membership benefits tied to the NFT. It shifts rewards from just being points you spend to an asset the customer actually owns.
Right, and that feeling of tangible ownership, it fundamentally changes how people engage with a brand. It's not just transactional anymore.
Okay, so we've got the huge value potential with RWAs. We've got the verifiable container with NFT utility. Now we need the connections, the roads. That sounds like Insight 3. The plumbing of interoperability. Why is this cross-chain communication suddenly the essential backbone?
Because fragmentation was killing early Web3 adoption. Simple as that. If value and data are stuck on separate blockchains, liquidity dries up, the whole system is clunky and inefficient.
Makes sense.
So to even approach that $30 trillion vision, assets have to move seamlessly, securely across different networks. And that fragmentation problem, it's being actively solved now by things like the Inter-Blockchain Communication Protocol, or IBC. That's basically a set of open standards letting different blockchains talk directly to each other trustlessly.
So we're talking serious data traffic moving between chains, and the market size reflects that need, right? Cross-chain protocols apparently generated something like 57% of total revenue in this infrastructure sector in 2025, facilitating over $1.3 trillion in asset movement annually.
Yeah, the volume is immense, and you have leading solutions like Wormhole. They've already handled over $6.4 billion in cross-chain value transfer. The velocity is incredible.
Wow.
And if you need one clear benchmark for how critical this interoperability is, just look at Wrap Bitcoin, WBTC.
Bitcoin on Ethereum.
Exactly. It's the dominant cross-chain asset. It represents 82% of all the Bitcoin being used on the Ethereum network, mostly for DeFi. That just screams user demand for flexibility, or people want to move their assets to where the best opportunities are, regardless of the native chain.
Okay, let's try and weave these four threads together then. We have institutional DeFi, the maturing engine, utility NFTs, the verifiable container, cross-chain plumbing, the vital road system, and RWA tokenization, the massive pool of value being unlocked. What's the takeaway? What's the ultimate so what for an entrepreneur looking at this space?
The so what is that none of these trends work in isolation. They're completely codependent. They need each other to reach their full potential, especially for liquidity. RWA tokenization brings the real-world value onto the ledger, but that value needs robust DeFi platforms to be traded, borrowed against, put to work.
Right.
And those tokenized assets, they need NFTs to act as that clear, immutable proof of ownership or claim. And all of it relies on cross-chain tech, so the value isn't trapped, so it can move efficiently across the entire ecosystem.
It's a whole system, not just parts. A symbiotic ecosystem.
Precisely. And for entrepreneurs, success now hinges on creating genuine utility, building sustainable token models, not just hype, and crucially, bridging actual traditional business needs with what blockchain can uniquely offer. We're seeing this applied already in really interesting areas, like carbon credit tokenization. You've got projects like Air Carbon Exchange, tokenizing carbon credits, selling them to governments or corporations. It tackles a huge environmental need and creates a new, verifiable, liquid asset class. That's the convergence in action.
Okay, here's where it gets really interesting, connecting it all back. You might be listening and thinking, okay, this RWA stuff sounds big, but is it still just theory years away? Let's drop that hidden bonus insight right here. The RWA market isn't future tense. It already hit $24 billion in 2025. That represents 308% growth in just 3 years.
300%.
Yeah. This isn't some far-off projection. The explosion is happening right now, and it's being driven by institutions finally recognizing that this infrastructure, it is the future of asset liquidity.
That growth rate, it's just undeniable proof. Traditional finance is integrating with blockchain at scale right now. It's probably the most exciting market expansion we've seen in years.
So let's do a quick recap. Just nail down those 4 key convergence points again for everyone listening, focusing on how they lock together.
Okay, 1, institutionalized DeFi. It's maturing, getting insured, providing the core engine for trading and yield. 2, utility-driven NFTs, moving beyond collectibles to become vital tools for things like supply chain, proof of ownership.
Got it.
3, unified cross-chain infrastructure, solving that fragmentation problem with protocols like IBC, assets like WBTC, creating that seamless road system for value. And 4, the RWA tokenization explosion. That's the massive value pool, unlocking potentially $30 trillion in assets.
And the bigger picture here seems to be a shift, doesn't it? Moving away from blockchains competing against each other towards collaboration, using foundational tech like layer 0 architectures.
Which are like the base layer networks allowing different blockchains to communicate.
Right, those layer zeros and universal messaging protocols, that feels like the next essential step for connectivity.
It is. And look, while the market potential is clearly enormous, we have to be realistic. The regulatory frameworks are still playing catch-up. Getting that clarity is really the final critical piece needed to truly open the floodgates for institutional capital at the largest scale. But we are seeing progress. Proactive steps, like the IFSCA consultation paper in India on RWA tokenization, it shows regulators are seriously thinking about how to build the rulebook for this new era. That's encouraging.
This isn't just tech talk then. It feels more like a blueprint for the next generation of business models. Remember, every insight gets deeper on the second listen, so make sure you save this deep dive in your library.
And now you definitely know something 99% of casual observers don't.
Next time, we're unpacking the science of decision fatigue and why it might be costing you money every single day. We'll see you then.